welcome. Please let me know how the audio quality is on X and YouTube. Let's get started. Tesla stock is down 2% today. Wow. The speed at which the stock is declining is actually surprising me too, to be honest with you. It's actually faster than even I expected. And but on the other hand, I just don't see how the company is worth more than $100 per share. So it makes sense. It makes sense. If you look at the top of your screens, Tesla FSD 13, after 25,000 miles logged in FSD community tracker, has achieved about couple hundred miles per critical disengagement. So 200 for city, 400 or so for highway, miles to critical disengagements. And that number must be hundreds of thousands, and in my opinion, 1 million miles per critical disengagement for a nationwide service. Even getting to Waymo's tens of thousands, I don't think is going to be enough for Tesla. I think for nationwide adoption of a Tesla robotaxi service, you're going to have 1 million miles traveled between critical disengagements, and that is the human standard. So, human drivers human drivers who own Teslas and using passive safety measures achieve about 1 million miles per critical disengagement. So that's what autopilot and FSD will have to beat to be adopted nationwide to replace the human, which is really where the value unlock is going to come. So let's continue with our Lucia. Welcome. How are you?
Hey, Yaman, how are you?
I'm good. Let's look at the overall markets. Overall markets are coming down now. Dow Jones down 0.3%. NASDAQ up 0.5. It was up more than 1% earlier today. S&P 500 is about to break even. Russell 2000 is up 0.5%. Apple is down 2% today. Nvidia is up 4 or 5% ahead of its earnings tonight. SMCI up 20%. I'm looking to short SMCI. I need to do some more research before I decide to do so. Consumer defensive stocks are down today. Walmart, Costco, Philip Morris are down. It's a mixed bag today. Mixed bag. Interesting drop in Apple for 2%. Let's see what that kind of correlates to here. In the last 5 days, the stock is also down about 2%. In the past month, it's up about 5%. In the past 6 months, up about 6%. $3.6 trillion company. Nvidia, on the other hand, is a $3.2 trillion company. I estimate Nvidia's value at about $2 trillion for now. And then we shall see. So I pinned at the top of your screens my Nvidia article. Please take a moment to like and repost this article and read it if you have a Seeking Alpha membership. If you don't have a Seeking Alpha membership, you get one free article to read a month. And I recommend using it for this one. Or the Tesla one. Tesla is now down 2.3% to $295 per share. Luce, what's going on with Tesla stock? It keeps dropping.
Well, and it's gonna continue dropping, I guess.
Yeah, okay. Don't you think it's dropping a little too fast?
No, Yaman, because people don't have a perception where that stock came from. It rallied on Trump election, which is totally nonsensical, and then it continued to rally for the new FSD version, which makes no sense. It was all hype. And people that think that 300 is the bottom don't really have perception of the stock at a whole, as a whole.
Okay. At what price today, if somebody came to you and said, Lucia, I'm going to sell you my shares ahead of time at a certain price, what's the maximum you would pay to buy Tesla shares today?
today, but I cannot resell them, obviously, right?
Yeah, you can't resell them, obviously, exactly. So you have to hold them for a couple of years, let's say.
$50.
$50? Oh my God. Luce, what are you doing? You're going to make some enemies. People are going to start sending hate mail to your house with that kind of price target. Um, I bought some Occidental Petroleum. I bought some Oxy, OXY, just kind of hedge the long end, the long side of my portfolio. If there's no recession, I think oil would recover a little bit more. So OXY, just a very small position to start with. And I'm going to dig into the company fundamentals, maybe write an article, and then we'll see where we go from there. Oxy today is trading at $48, $49 per share, 48 and change. Okay, so it's a very small position, and then we'll see after I dig a little bit more into the company. All right. Let's see what else. Wow, markets are coming down fast. Okay. New home sales dropped dramatically. In January, new home sales were at 657,000, below the expected 681,000, and way below the prior 734,000 units. So new home sales dropped dramatically in January. Mortgage application index was lower by 1%. I think the purchase application index has been stable for a few years, but the surprising part, I think, for housing analysts right now is that home purchasing activity is not increasing as mortgage rates decline. But the reality of the situation is mortgage rates have just started to come down. So let's see what happens when we get to 6%. So we're at 6 handle right now. It dropped below 7 handle, now about 6.9%, I think. And in some parts of the country, you can get mortgage above 6.5%. Let's see what happens if you get to 6%, maybe a 5 handle. I suspect that housing analysts will continue to be surprised how slowly demand comes back. Because in the last couple of years, many home builders, I don't think all home builders, but many home builders around the nation have offered subvented loan rates for their top customers, top quality credit, excellent quality, great quality credit, have been able to buy homes at about 5% mortgage rate anyway. So, especially if unemployment rate continues to rise, resumes rising, let's say, then I think the housing sector might be in for a wild ride. But I'm keeping an eye on certain leading indicators on unemployment, and so far things are still stable. Initial weekly claims are still stable, but I'm starting to see in some of the proprietary indices that I've created, I'm starting to see some cracks, but it's not conclusive at this time. Oil prices are at $68 per barrel. Natural gas down 3% to $4. The yield curve has come down another couple of basis points today. 10-year Treasury yield is at 428. 428. 5-year Treasury yield is at 411 today. 411. Okay. Let's read the Reuters article of the day. NASDAQ leads Wall Street higher as NVIDIA results grab focus. Let me just first check if there's any questions, comments on YouTube. Okay, let me know if you're on YouTube. Let me know how the sound quality is, please. Thank you. All right, let's read this Reuters article. The tech-heavy Nasdaq led Wall Street's main indices higher on Wednesday as chip stocks rebounded ahead of Nvidia's results that are crucial to eliminating future demand for AI. At 11:31 a.m. Eastern, the Dow Jones rose 122 points. We already talked about this part. Things have started to come down since the article was published. AI chip leader NVIDIA gained 4%, while peers Broadcom and AMD also rose, driving the broader semiconductor index 2.6% higher. NVIDIA's quarterly results and forecasts expected after markets close are likely to set the tone for AI stocks that have dominated Wall Street. The launch of low-cost AI models from China's DeepSeek had rattled the industry in January and raised questions around big tech's heavy investments into the technology. Quote, NVIDIA has been the bellwether of this bull market, But what's fundamentally shifted is this assumption that the only companies that will win and dominate generative AI themes are the Magnificent Seven, said Lisa Chalette, Chief Investment Officer at Morgan Stanley Wealth Management. What the DeepSeek news reminds everybody is that's not how technology revolutions work. Mega caps were mixed, with Meta up 3%, Apple down 2%, Tesla rose 1% on the day after electric vehicle makers' market value fell below $1 trillion. Again, this article was published earlier in the day, so since then, stocks have come down pretty substantially. Supermicro jumped 20% after the chip company filed long-delayed annual and quarterly report. Man, can you believe this? Just because you file what you're supposed to be filing, your stock jumps 20%. That makes no fucking sense whatsoever. This is probably a short squeeze. Let me look at my indicators if there's a short squeeze going on in this company. I'm not looking to short Supermicro, but they did generate some profits in the last 12 months or so. Market cap about $30 billion. PE ratio is 26. And it's just, I've been kind of looking at this company a little bit. The stock was as low as $18 per share, and after that, it went to like $60 per share. So it's a triple, and it's come down a little bit. Kind of volatile around here, but let me see. Let me see a couple more things here. Give me 1 second. Yeah, yeah, wild. I mean, at the end of the day, I think this company is worth much less, but it's just hard to short a company at this P ratio without knowing it too well. So I'm going to look into this a little bit more. Okay. S&P 500 and Nasdaq logged their biggest four-day decline since September on Tuesday, also due to weakness in tech stocks after an analyst report hinted at overcapacity in AI infrastructure. Wall Street's main indices were also on track for monthly declines, with the Nasdaq poised for its worst drop in 10 months. However, a Reuters poll showed strategists still expect the S&P 500 to finish 2025 about 9% higher than current levels, although market volatility will persist. On the fiscal front, Donald Trump's $4.5 trillion tax cut and border security agenda will be sent to the U.S. Senate after passing the Republican-controlled House of Representatives. Okay, so $4.5 trillion tax cut and border security agenda is moving from House to Senate. Okay. Traders expect the Fed to deliver its first interest rate cut in July, according to data compiled by LSEG. In the latest on global trade, Trump ordered a probe into potential new tariffs on copper imports, sending price of the red metal higher. Phoenix-based copper miner Freeport-McMoRan jumped 5.2%. GM rose 5% as the automaker said it would increase its quarterly dividend by 25% and undertake a new $6 billion share buyback program. Intuit shares rose 13% after the TurboTax maker forecast third quarter revenue above street estimates. Advancing issues outnumbered decliners by 2-to-1 ratio on the NYSE and again 2-to-1 ratio on the NASDAQ. Okay. Lucia, any thoughts on any of this?
No, Yaman, I'm just really waiting for Nvidia earning call, and see what happens from there.
Mm-hmm. Yeah. Any final predictions?
So it's very hard to predict, but in my opinion, everything is gonna go down and it's gonna be disastrous. I think it's very hard to please the market, and I think everything is so leveraged on AI that makes zero sense. And I don't know if it necessarily is gonna go down today or it's gonna go down in 4 months. At some point, it's gonna go down, and today is a premium opportunity for that to happen.
Yeah. Okay. Yeah, we're all waiting. I think the entire market is waiting on that at this point. I don't really have anything else to discuss here. We can't call it an early day. Actually, you know what? I want to look at. Let me see here. There's one Bloomberg article on Tesla about Europe. Let's find that. This was referenced by Autoline Network podcast today, and let me see if I can find this article real quick. Um, Sales are plunging in some of the world's biggest EV markets, and protesters and vandals are targeting the company's stores. Tia Helton, a car aficionado who lives minutes from Tesla's flagship California factory, bought one Tesla for the family fleet and nearly purchased a second one last year after Elon Musk made gestures resembling a Nazi salute at an inauguration event for President Trump last month. He wants nothing to do with the brand. Yeah. Yeah, I mean, man, this is crazy. I mean, a year, 2 years ago, I had no idea that it was going to get to this point. I thought that maybe he wanted to get Trump elected for deregulation and that he was going to wash his hands off politics and go back to managing Tesla and his other companies. And the exact opposite has happened. He's only gotten more involved with politics. And it's no doubt that in California, across the US, Canada, and across Europe, people just hate the brand now. It's crazy. Luce?
Yeah, man, before you close, I wanted to ask your opinion on something if I can, because I think you
Yeah.
are way more expert than me on this.
What is it?
So in the comment, I posted a news of Intel, an official news of Intel, and I wanted to ask, is it normal to have this kind of conferences on closed door, considering that Intel foundries are such important part of the business? And there is not much official information about Intel foundries Intel Foundry's business and management as a whole. So, is it normal to have this kind of conferences on closed door? The part I evidenced.
Yeah, it's not really a company I know too much, and yeah, I don't know if this is normal or not. Sorry, man, I can't answer your question on this one.
Okay, no problem.
Yeah.
Are we gonna have a space for Nvidia earnings, or this is gonna be it for today?
Yeah, that's going to be it for today. I mean, actually, I'm going to probably keep going. I'm going to read a couple of articles here, and then, but I'm not going to. I'm going to work on an article for Nvidia to be published, like a post earnings article for Seeking Alpha, and then we can talk about tomorrow in tomorrow's space. Unless people have other questions here. Um, yeah, it's just crazy to me how FSD, after all comments by Elon, has just not performed up to expectations, and it's really a shame. It's a shame. Like, he's lost a lot of credibility, I think, in people's minds, people's eyes, and I don't know how that's gonna come back. What do you think, Lucia? Oh, Lucia's went to listening mode. All right, let's see if there's other couple articles here. I'm gonna look into any other news from Tesla. Tesla bulls have gotten really quiet in the last month. The stock is down about 30% in just 1 month. From all-time highs, the stock is down about 40%. So the only really thing that can turn this around, I think, Optimus really, knocking out of the ballpark. But I just don't see when that's going to come about. I don't know when Optimus is going to come to market. Doesn't make any sense. I mean, we heard Galley selling 10% of his shares. Obviously, that's very um, unusual. But I'm short the stock, so I think the stock is headed to $100 per share, and I explained why in an article a few weeks ago on Seeking Alpha. I'll pin it up here. If you haven't read it, highly recommend reading the article, and then keeping an eye out for other articles. Let's see what's. I mean, Troy had a couple of articles today, and a couple of posts today that I thought were informative. So let's go through that real quick. Troy seems extremely convinced, way more convinced than I am, that Tesla's sales this year is in no way going to be above last year's. I think that's the likely scenario, but how confident he is really stunning to me. But he knows his stuff. Like, there's nobody who can forecast Tesla's production deliveries like Troy Tesla can. And if you haven't subscribed to his Patreon, please do. Troy's Patreon has played an essential role in me understanding the company better and shorting the company's stock at the right time. So, among other things. Steven, go ahead.
Hey, good morning, Iman. I hope you don't mind a question that's not directly Tesla related. It's just more of a market question. But so my question
I
is,
just want
sir.
to, before we switch to market from Troy, let me just read this tweet from by him. Troy Tesla today said Tesla delivered 495,000 cars in Q4. They came very close to 500,000, but didn't make it because of demand issues. Sadly, reaching 500,000 in a single quarter does not seem possible this year either. I mean, that is a hell of a statement. You know, with new Model Y coming into the market, it's really amazing how confident he is that Tesla will not sell more than 500,000 vehicles in any quarter this year. Because quarter to quarter production deliveries can really vary, but he just seems like, 100% confident. And then he says this year's best quarter will likely be below 470,000 units. But the situation seems to be getting worse. And soon, even 450,000 might be hard to achieve. That's incredible. I mean, 450,000 times four, you're looking at 1.8 million. And if that's your best quarter, your worst quarter obviously is going to be 350,000 this quarter. So 400,000 average, 1.6 million, and your capacity is more than 3 million. So you're operating about 50% capacity. And in some parts of the world, in some factories, about 40% capacity. And these factories aren't profitable until you get to 70, 80% capacity. So Tesla is going to lose billions of dollars this year, I think. And people haven't really woken up to that. And I don't think robotaxis are going to come. I don't think Optimus is going to be anytime soon. And when it comes to market, who knows what the competitive landscape from China is going to be like. There are already companies that are mass producing humanoids in China. So China is ahead of Tesla on humanoids, as opposed to BYD catching up and then passing Tesla on electric vehicles. So they're not giving Tesla a 10-year lead this time. So, I mean, Elon is not focused on the company, and that's the end of story. He just fucking killed Tesla. It's crazy. It's crazy. I mean, why? Just because you didn't get your pay package? It's nuts. And I mean, Troy responds to all reasonable questions. When you ask a question to Troy, make sure you're asking from a place of trying to learn as opposed to accusing him of anything, because he can also block you, and you don't want to be blocked by Troy. You don't want to miss the content. You don't want to miss the ability to ask him questions. The guy is really, really good. So highly recommend subscribing to Troy's Patreon and reading the articles that he publishes on Tesla's production deliveries. And he's been ringing the alarm bells over the last couple of years. Ever since 2022, he's been ringing the alarm bells on Tesla's impact on Elon's political activism on Tesla sales. And I personally didn't believe him in 2023. But then 2024, it became clear to me that he's right. And then 2025 is like it's a year that I don't think anyone of us imagined for Tesla's future, even as recently as 2023, 2024. So it's going to be a really difficult year for Tesla, where I think Tesla loses billions of dollars of net loss we're looking at here. Troy says in China, Tesla is currently the second largest seller of battery electric vehicles, but Xiaomi will release its second car, the U7, in June or July this year, and is likely to push Tesla into third place. I mean, another thing that really opened my eyes is last year is Chinese automakers ramp production at an extreme speed, like 10 times faster than Tesla. And maybe not 10 times, but multiple times faster than Tesla. So what that means is everything we heard about production hell is not true. Because physically, clearly, it's possible. It's possible to ramp vehicles from 0 to 10,000 a week within a few months. They do it over there. but Tesla doesn't do it. I think Tesla just doesn't do it. Even in China, they don't do it, and it's possible. So they have Chinese workers over there. They have the cheap raw materials and electricity and everything. And Tesla still can't do it in China Shanghai factory. What BYD and Xiaomi and others do with their vehicles. I mean, Xiaomi they've been producing cars for like a year or 2 years, as opposed to the 20 years that Tesla has been around. So crazy to me how far ahead they are. And now the fact that BYD threw, ADAS systems that are better than FSD for free in cars priced half the price of a Tesla. I mean, if that doesn't open eyes, then I don't know what will. I think there's still some bulls that are holding out for the hope that the new Model Y will increase sales. But read Troy's analysis. The man is undefeated for a decade now. And he sounds certain that Tesla sales will go down in the first year that the new Model Y is available. That is incredible. So, first year the new Model Y is available. Second year the Model 3 is globally available. New Model Y, Model 3 Highland is globally available. And if sales go down in that condition, what's going to happen when these cars are a couple of years old? Tesla is going to continue to lose billions of dollars next year. So what's the value of a company that is shrinking on the top line, losing billions of dollars on the bottom line, with no prospect of achieving any sort of competitive advantage in the humanoids or robotaxis? And a CEO that, I doubt if he even steps into the Tesla factory these days. So, Luce?
I just wanted to say that, in my opinion, Tesla without Elon Musk will not survive, and I'm sure of it. Like, Tesla is feeling the emptiness from the CEO, the lack of a CEO, and things are crumbling down. And I truly believe that Tesla is not gonna make it. And I think they should hire a full-time CEO, obviously a well-prepared person with technical knowledge and everything. But as things are right now, I will bet that in 10 years, Tesla is, let's say 15 years, Tesla is not up running anymore.
Yeah. I don't think that's, I don't know. I don't know. I guess it depends on Elon, because the company is headed that way, right? There is a bankruptcy risk. But I just don't know if Elon would allow that. I don't know. Like, he's mentioned Tesla to be his child and everything, or it's like a child to him. But that was like, back in my last years. He's changed so much since then. The company has changed so much, and I think that he just feels. I think Elon just feels like the fact that he didn't get his comp package after hitting the targets, I think really rubbed him the wrong way. And I think that what we're seeing in Tesla stock is a result of that. Steven and Aluce.
Just to jump off of what Luce said, there's no brand image professional that can save Tesla at this point. It is, and I think I asked you this yesterday, Iman. It's too far gone at this point. Tesla is not salvageable. I don't think, and I mean, it's a shame, but you might as well get it over with at this point.
Luce?
Sorry, Yaman, I forgot. Oh, sorry.
Okay, no problem. Take your time. We have a new speaker request and speak. Let me just look over, or there's this guy's a Bitcoin guy, it looks like. I don't know anything about Bitcoin, but I think it's a house of cards. Bitcoin, I think all crypto is house of cards. Bitcoin's at $85,000. Wow. Bitcoin's plunging too. Look at that. MicroStrategy is down quite a bit as well. I had a short on MicroStrategy, but I closed it a couple months ago. Maybe too early. And yeah, that's crazy. Elon's own brother just sold $75,000 shares of his Tesla stock. They knew the best time to jump ship was 450. The second best time to jump ship is right now. Says Jerry Rig Everything. Yeah, that's crazy. Luce?
Yeah, so to reconnect with the Elon topic. So in the past, I owned a very small business and it was, let's say, moderately successful. So I was happy with it. But the problem is that when you own a business and you dedicate so much of your time to that business, at some point you get burnt out. And when that happens, it's very, very difficult to get back caring about the business, especially if you get something more redditive or more rewarding in life. And maybe this is not something that many people can understand, but it's very easy to burn out.
There's a headline that just popped that says Trump administration tells U.S. agencies to prepare for large-scale layoffs. So I read yesterday that 90%, 95% of job additions in the last 12 months has come from the government sector and adjacent agencies. So, federal, state, local governments. And if the government sector turns negative, then we're going to have higher unemployment rates. So I think the recession is upon us. I think the recession started in Q1 2025, and I think we're now seeing the acceleration of that, starting with the stock market and the bond market as well. The yields are coming down, and the stock market is not reacting positively to lower yields, which is something that didn't happen last year. So I think the recession has started, and I recommend people to position themselves both financially and in their personal lives accordingly. Stephen?
To go back to what Luce was saying, I mean, burnout is fine, and I think everyone can understand a certain level of burnout after devoting this many years to the company. But the problem is, he has all these products yet that he's yet to deliver on. That he's just promised all these people, and he's going to try and walk away from it. And I hope the shareholders don't let him, but they're going to, because that's compromise, like we know. And it's in the end, it's going to suck for the consumer, and it's going to be horrible. But that's all I. No, but that was the end of it.
Okay, thank you, Stephen. Let me just read this macro news. In January 25, U.S. new home sales fell by 10% month over month on an annual rate of 657,000, significantly underperformed the expected 679,000. Median sales price for new homes increased to 446,000, notable rise from the previous year. Interesting. Number of unsold completed homes for sale at about 126,000. Interesting. Yeah, the new home market is really challenged, but the existing home supply is very low, and 90% of the housing market is existing home supply. So, unless we see a surge in unemployment rate, I don't see plunging home prices, but I do think unemployment rates will start ticking back up. So, um, you know, we'll see if it rises enough to hit the housing market. All right, what else? Let's look at Sawyer's account. Let's see if there's any news there. Ford CH Farley says their low-cost EVs won't have level 3 autonomous driver assist tech on them. The lower cost vehicles, you can't put a level 3 electric architecture in. So we're not going to have LiDAR systems and all sorts of very sophisticated sensor set because it won't be affordable. It'll have its own electric architecture, which is great, but we're not going to put all the bells and whistles on it at that price point. Well, I mean, BYD is doing it. So a lot of these companies like Ford, GM, Tesla, and a bunch of others are limited to selling in US, where BYD is, because of government protectionism, BYD is not allowed to enter, is not allowed to compete in Chinese automakers aren't allowed to compete in US or Canada. So, and that is the most profitable automotive market in the world. And despite that, BYD is making more money than Tesla today. despite selling vehicles at half the price of Teslas. So if BYD were allowed to enter the US and Canada, there would be no Ford, GM, or Tesla. Sawyer says, I think Ford licensing Tesla's FSD is inevitable. I don't think so. I don't think so. Sawyer also thought Rivian was going to survive. So Poland has ordered additional 5,000 subs. No one cares. T-Mobile says they're adding 1,000 people to T-Mobile subs. No one cares. Deliveries of our new Model Y kick off in China today. Heart racing for more to come. Okay. Yeah, I mean, so in the last 3 months or so, what I said 3 months ago was we're going to have an initial wave of extreme optimism and hype pushed by bias influencers on FSD 13, and that's exactly what happened. The stock ran, due to days to expiration call option manipulation. The stock surged in November and December. And then and I said, when FSCV 13 goes out to more than just a handful of bias influencers, the reality will set in and the stock will come down. That's exactly what happened. And that's why I increased my position, Tesla short position, above $400 per share. And I'm still holding on to it. I think the stock is headed to $100 per share. And FSD 14 will achieve less than 99% of trips without a critical disengagement. So that's still about 5 to 10 years away from a mass adoption of a robotaxi service. And the same timeline for Optimus. So the stock is going to be muted for a number of years in the future. So through 2030, I think. And then 2030 plus is when, if Optimus and robotaxis can achieve some sort of competitive advantage, which I don't know if Elon will be around by then because he's going to be 60 plus years old. And he might be on to his 20th kid. Who knows? At that point, it's going to be tough for Tesla to compete against these Chinese humanoid manufacturers. Tesla has increased the displayed range of Model 3 when equipped with the 19-inch Nova wheels by up to 6%. Model 3 long-range rear-wheel drive, 343 miles, a 6.5% increase, up from 322 miles. Sawyer says Tesla's a volatile stock, it hasn't, blah, blah, blah. He also thought Rivian was going to survive, so I wouldn't take his advice on financial matters when it comes to this stock prices. Lucid just reported Q4 revenue of $234 million, up 49% year over year. Okay, the CEO was fired. I think the company is headed for bankruptcy, just like Rivian. All 10 Cybertrucks were donated, blah, blah, blah. That's all news. Okay, so no news from Sawyer today, no material news. Let's look at anything else here. A bunch of political stuff about Elon. All right. Amazon unveils Alexa Plus with Gen AI. Amazon has introduced Alexa Plus, an advanced version of its voice assistant, now powered by Gen AI. This upgrade allows Alexa Plus to manage multiple requests at once, perform tasks like booking reservations autonomously, and integrate more deeply with smartphone devices. Alexa Plus will be available for a subscription fee of $20 per month, but it's free for Amazon Prime members. Okay. Perform tasks like booking reservations autonomously. Okay. Now, the interesting thing about Amazon as it relates to NVIDIA is Amazon has its own training and inference chips. They're building their own training and inference chips, and they're on the second version of it. And my understanding is that they are much cheaper, like cost performance basis. So performance per cost. Amazon's own chips are much better than NVIDIA's Hopper GPUs. And we're also seeing, like, one thing I'm going to be watching for today on NVIDIA call is H200 versus H20 demand shift. I think Chinese buyers or international buyers are shifting to H20s, which are much less price. I think less than half the price of an H200. So that would mean a significant pressure, or that could mean a significant pressure on NVIDIA's gross operating net margins, which is what I explained in my article for NVIDIA, that it will drop to $100 per share. This article is at the top of your screens. I would highly appreciate it if you could please like and repost that article, share with your followers. And I'm going to publish on Seeking Alpha a post earnings review as well. That article is going to go out tonight or tomorrow. Luce, did you have your hand up?
Yes. So regarding those custom AI chips from Amazon, from Meta, and so on, they are extremely competitive, and they are like it's not rare to see those kind of chips outperforming NVIDIA solutions. That's not really the problem. NVIDIA is doing well because of of the ecosystem and their software. For example, even Intel has an NPU called Gaudi that outperforms NVIDIA in performance. But the problem is that it lacks the software and the ecosystem. But when it comes to Amazon, all those other companies, they definitely it's definitely worth the investment to produce and to bring up those chips, even just to have a level of a lever to ask lower prices from Nvidia.
Well, that's true, but it's not just a matter of wishing it, right? Like Tesla tried to do it with their Dojo program and it failed. And 3 years ago, when the lead for the Dojo program left, that should have been a clear indication for people that Dojo was a dead on arrival. And we talked about that in Tesla Live 2 years ago or so. And then on the inference chip side, Tesla FSD computer hardware 3 has failed to meet up to expectations. Hardware 4 has failed to meet up to expectations. And I bet you Tesla is not going to get to robotaxis even with hardware 5. I think it's going to get 5 to 10 years. So we're talking like hardware 8. I think Tesla might have a chance at robotaxi service, a nationwide adoption of robotaxi service. I mean, nobody cares if you can just do a few miles of square miles in Austin. No one cares. That's just a few $1 million to the bottom line. No one cares about that. Waymo is up to like 5, 6 cities now. They're going to get to a dozen cities later this year, and still they're losing a lot of money, and they're not worth much. And by the time Tesla gets to a robotaxi service, nationwide service, Waymo is going to be top 20 cities with tens of thousands of vehicles already operating cheaper than Uber. So where is the economic profit potential for Tesla? I don't see it. Luce?
Yeah, just to finish up the cheap intervention that I had. And so what I'm saying is that at some point this ecosystem is going to be developed in house, and there is even no need for Nvidia because they are worse performing, and that's a matter of fact.
Yeah. Steven?
Hey, do you think that they will continue for the deployment in Austin in June if the current environment doesn't change for Tesla? And when I say environment, specifically the hate and all the violent acts you see towards Tesla. Do you think if this keeps on going, are they still going to roll out a robo taxi in June, which will likely just be tagged with Nazi symbols and all that stuff?
Yeah, I don't know. I think it's possible if they focus on it, and it's always been possible for Tesla to do what Waymo is doing with its cars, but it just takes a lot of engineering time that Tesla doesn't really have to spare. And a lot of the training compute time Tesla doesn't have time to spare. So they would have to focus in Austin, collect data from Austin, solve these absurd edge cases that appear specifically for us, just like they did for the Optimus event, where they did it for like a block basically. They had a bunch of cyber cabs going around at like 5, 10 miles an hour. And, maybe they can increase that to 20, 25 miles an hour with like a dozen or 2 dozen Teslas. But who cares? Like that doesn't mean anything. And like Waymo already has a service that's competing with Uber. And Waymo, I think most critically, what Tesla doesn't have, Waymo has is a Google is vertically integrated into AI research through DeepMind. Tesla uses DeepMind research. Waymo uses DeepMind research. But the advantage Google is going to have is they can communicate with, like DeepMind team can communicate with Waymo team to better understand the problem, to maybe create a next version of the inference computer to fit their needs, to kind of give an early look to the Waymo team about the upcoming AI research, like maybe something like Transformers upcoming in the next year or two. Then the Waymo team can, take an early look at that. The Tesla team cannot, and accordingly plan their operations around that kind of where the puck is going. Where that Tesla will have to be reactive to it after the paper comes out. So Google with their TPUs had actually rival NVIDIA's chips for inference purposes. I mean, Google has said they do 90% of their training and inference on their own TPUs, tensor processing units. And they're now, I think, version whatever 6, 7, 8, or whatever it is. So they have it down to a system, and now Amazon is also able to do that. I expect Amazon to dramatically lower their purchases from Nvidia in the coming years. Like I addressed this in my Nvidia article linked at the top. That people make the mistake, Nvidia bulls make the mistake of adding up to all these capex announcements from all these megatech companies, hyperscalers. But none of these hyperscalers say we're going to allocate 50% of this number to NVIDIA. Nobody says that. So only about 40-50% of the total capex goes to GPUs. The rest of it goes to networking, other data center needs, hiring engineers, R&D expense, in-house, etc. And then only a portion of the GPU money goes to NVIDIA. But increasingly, these companies are producing their own in-house ASICs, which means less and less percentage will go to NVIDIA. And I shared my forecast by quarter for the next 8 quarters, a revenue forecast, a gross margin forecast, an operating expense forecast, tax rate, and net income forecast for NVIDIA in an article. And then I showed how I reach my price target. And it's actually a very popular article. I think it's a good one. And I'm going to publish a post-earnings analysis after today. So after today's earnings release by NVIDIA. So I highly recommend reading the article. Luce?
Hey, Yaman, did you see the news I posted in the comments? I think it's very interesting. It's about Huawei AI chips production to produce in China instead of buying from the US. It's very interesting if you didn't see it.
So this is in the replies.
Yeah.
Huawei. Let's see. No, I only see the Intel one that you sent. Did you post it on your own profile?
There, I posted in the comments the picture of the article. You can just read this piece here. I think it's very interesting.
Okay, let me see. Okay, here we go. 12 seconds ago. Okay, Huawei has significantly improved the amount of advanced AI chips it can produce in a key breakthrough that supports China's push to create its own advanced semiconductors. The Chinese conglomerate has increased the yield, the percentage of functional chips made on its production line of its latest AI chips, to close to 40%, according to 2 people with the knowledge of the matter. That represents a doubling from 20% about a year ago. The move represents an important advance for Huawei, which has been rolling out its latest Ascend 910C processors, which offer better performance than its previous 910B product. The improved yield means that Huawei's production line for Ascend chips has become profitable for the first time, according to people with the knowledge of the business. The company has a goal to further improve yields to 60%, in line with the industry standard for similar chips. The breakthrough is a step forward for China's hopes to build computing infrastructure that can support its burgeoning AI industry, despite U.S. export controls designed to help the country able to develop sensitive technologies. Okay, so the first thing I want to do here is thank you very much, Luce. I've heard of this chip before, but I haven't looked deeply into it. So let's take a now that you brought this up. I'm going to pin this up here. Thank you very much, and we can look into this live. So tell me about pull up your favorite LLM. Mine is ChatGPT 4.0. Tell me about Huawei's Ascend 910C. Huawei's Ascend 910C is an advanced AI processor designed to compete with leading AI chips in the market. Building upon the foundation of its predecessor, Ascend 910, the 910C offers enhanced performance and efficiency. Key features and specifications. Ascend 910C delivers up to 320 teraflops of FP floating point 16 performance and 64 teraflops of INT8 performance, making it suitable for a wide range of AI tasks, including training and inference. Power consumption. Designed with energy efficiency in mind, the chip consumes approximately 310 watts. Okay. Utilizing Huawei's proprietary DaVinci architecture, the Ascend 910C offers scalable and flexible computing capabilities tailored for various AI workloads. The chip is produced using Semiconductor Manufacturing International Corporation SMIC's 7-nanometer process technology. Okay. Huawei aims to position Ascend 910C as a viable alternative to NVIDIA's AI chips, especially within the Chinese market. Reports indicate that 910C achieves approximately 60% NVIDIA's H100 inference performance. Despite challenges posed by U.S. trade restrictions, Huawei's plans to mass produce Ascend 910C with production targets set for 2025. The development and deployment of Ascend 910C underscores Huawei's commitment to reducing reliance on foreign technology and bolstering China's domestic semiconductor capabilities. Offering competent AI processors, Huawei seeks to capture significant market share AI chip market, providing alternative blah, blah, blah. Okay, let's do this. Compare it to H100, H200, H20, and Blackwell. Ascend 910C is an AI processor designed to compete NVIDIA's offerings, particularly in Chinese market. Here's a comparison. Performance. Ascend 910C versus H100. Ascend 910C is reported to match the performance of NVIDIA's H100, which is among the most advanced AI chips available. This parity positioned Huawei as a strong competitor in the AI hardware. Ascend 910C versus H20. Due to US export controls, NVIDIA offers H20 in China, a modified version of H100 with reduced capabilities. Ascend 910C aims to fill the performance gap left by these restrictions, providing Chinese companies with a high-performance alternative. This is according to a Wall Street Journal article that was published August 13, 2024. Okay. Ascend 910C versus Blackwell. NVIDIA's upcoming Blackwell architecture expected to surpass H100 in performance. While specific details about Blackwell's capabilities are limited, Huawei's Ascend 910C represents significant advance for Chinese domestic. Lucia, this is from August 2024. So why do you think this news is important at this time?
Well, Yaman, it's very simple because before they weren't able to make it profitable because the yields were very bad. There is a problem that China has with the import of lithography machines, and the fact that they are able to build a competitive product on 7 nanometers instead of 4 nanometers that the H100 uses. It's almost like a DeepSeek moment in a sense that China, in fact, is going to make their own chip and they are basically undercutting the US again.
I agree. I mean, I guess another thing you could have said here is, so we knew Ascend 910C was coming, but only now it's reaching volume production with high yield. So now it should start eating into NVIDIA's orders. Is that fair to say?
Yes, and the fact they are succeeding with the 7 nanometers and with all the lithography machines as well, that are also cheaper, by the way.
Yeah. Give me 1 second. I'm going to do some more research here. So this Financial Times article was published 2 days ago. Thank you, Luce. So this is news, and actually, Nvidia stock started dropping 2 days ago. So maybe it could be in part due to this. So thanks for letting us know of this. And now what I want to do is create a table with key specs of the chips I mentioned. So this is 910C versus H100 versus H200 versus H20. Okay. Architecture Da Vinci. The other ones are Hopper, released at October 24. The other ones are late 2022, late 2023, and 2024. So, I mean, I think we should probably compare this to H200, not H100, because H100 was more of a 22 kind of technology. So, I mean, NVIDIA is still like a year ahead compared to this, right? Let's see. Floating point 16 performance, 320 teraflops and 2000 teraflops for NVIDIA's Hoppers. INT8 performance, yeah, this is more of an H20 competitor. Okay. Power consumption 310 watts. NVIDIA's H Hoppers are 700 watts. So details TBD, it says Ascend 910C. H200 upgrade to H100. H200 maintains the same competition performance but increases memory to 141 gigawatts. Okay. So high bandwidth memory, but we don't know how many gigawatts right now. Yeah, I don't know, Lucia. I don't know if this poses a serious issue for NVIDIA. I think it might be more just for focus on the Chinese market because of US export controls, really. As of February 2025, Huawei has not publicly disclosed the detailed memory specs for the Ascend 910C AI processor. However, it's anticipated that 910C will utilize high bandwidth memory technology, potentially HBM2E, to support its high performance requirements. This expectation is based on memory configuration of its predecessors. 910 was equipped with HBM2 memory. 910B was upgraded to HBM2E memory, offering higher bandwidth, increased capacity. Given this progression, it's reasonable to infer that SN 910C will continue this trend, possibly incorporate HBM2E or a more advanced HBM variant. Okay, so we don't know the memory specs here. Chris, how are you? Chris?
Doing good, man. Just making memes today.
Okay, let's see. As of February 2025, Huawei's Ascend 910C stands as one of the most advanced AI chips developed in China. While it delivers approximately 60% of the inference performance of NVIDIA's H100 GPU, it represents a significant milestone in China's efforts to achieve technological self-sufficiency in the AI hardware sector. Okay, so I mean, it doesn't compete with H200. Okay, it barely competes with H100, which was developed in 2022 and scaled throughout 2023 for NVIDIA customers. So they're still about a year to 2 years behind NVIDIA. But to the extent that Tesla, but it basically shuts out Chinese market to NVIDIA because of export restrictions. In addition to Huawei's advancements, Chinese startup DeepSeek has made notable progress in AI model development. DeepSeek's AI models are designed to be computationally efficient, enabling them to perform competitively without relying on the most powerful hardware. This approach has provided Chinese chip makers, including Huawei, with a competitive edge in the domestic market, allowing them to narrow the performance gap US versus the NVIDIA's. Despite these advancements, China's AI chip industry continues to face challenges, particularly in achieving performance parity with the leading global competitors. Ongoing efforts in research, development, and manufacturing are crucial for China to further enhance AI chip capabilities and reduce reliance on foreign technology. Okay. I mean, like I've said, I think NVIDIA's problem is more demand side as opposed to supply side. I think the primary challenges from these hyperscalers, which comprise 50% of NVIDIA's data center revenues and 40% of overall revenues, developing their in-house chips is the real risk for NVIDIA's growth. And of course, Chinese catching up at some point is a risk as well, but that's not the case today. And BYD was also behind Tesla back in 2020, 2021. And then 2022, they reached a bit of a kind of a same level performance production levels. And then 2023, 2024, BYD just demolished Tesla in China. So it's possible that the Chinese manufacturers eventually pass NVIDIA, but that's possibility at this time. I think the one thing that really DeepSeek people are missing about DeepSeek is how it reduced reliance on CUDA. So maybe I'll add that to my new article for Seeking Alpha. Chris?
Yeah, I've been enjoying using DeepSeek. It has a lot less like safety nerfs. It's going to do more things for me. But on another note, I just have a question for you, Yaman. Is there anything that you're long on right now other than T-bills?
I actually took a small position on Oxy today, very small. Kind of the position I take before I start digging further into stocks, into companies. I need to dig into further Occidental Petroleum. It's trading at about 25 times PE, $45 billion market cap, dividend yield of about 2%. Oil prices are low. The stock is cheap. So, I think the downside is limited on this company. Warren Buffett obviously continued to buy for several quarters now. That was part of the position as well. So, 13,000 employees based in Houston. It's been around for more than 100 years. It's a pretty safe company. I'm going to look further into the company and see if I want to increase my position. But we'll see.
I recently bought some Berkshire shares after you read the annual shareholder letter. I read it more myself and decided that I want to invest in Berkshire at least a little bit.
Yeah. I mean, Berkshire Hathaway is a great company. It's just that, I fundamentally think that asset managers are very important. They're critical to the performance of their funds. And it's usually the lead guy that's very important. So, he's 96 years old. There's a risk that the KEMA risk is obviously very high. He even said in the letter himself that it's not going to be too long before Greg Abel starts writing these letters and becomes a CEO and all that stuff. So, or kind of replaces them. So, I think that risk is important for Berkshire. I think for people who, just like Apple stock, for people who think that there's a high possibility of a recession starting now in 2025, but they don't want to be outside of the equity market, just in case there isn't one. Berkshire Hathaway is a good stock for that kind of portfolio, like a conservative equity for portfolio. Berkshire, companies like Costco, Walmart, like those are kind of safer stuff. Costco is not cheap today, so maybe I would put like a limit buy order for that one. But Berkshire has extreme liquidity, obviously. Apple has extreme liquidity. So you want to be in companies that have proven track records over several recessions, like Apple and Berkshire Hathaway, with high cash balance, liquid balance sheets, and very high free cash flows. So those two I would recommend. Oxy for me is more of it's not a recession play. It's more of like if I'm wrong about a recession coming, then I think Oxy would do well. So it's more of that kind of thing. I think on the recession front, I'm pretty well positioned with my short position. So make sense? Okay.
Yeah, thanks for answering my question. I got to drop, but I'll see you another time.
All right. Tesla stock just dipped below $209 per share. It is headed to $100 per share. My confidence on that price target has increased the more I look into the company, the more I kind of wrote my article that's linked at the top. I think Tesla stock will drop 80%. It might be the Amazon of the tech bubble. I think Tesla may become the Amazon tech bubble where it drops 90% but continues to stick around and then eventually maybe potentially increases back up to multi-trillion-dollar range because of FSD, robotaxis, Optimus, whatever. But that's not going to be in the next 5 years. I think the next 5 years is going to be very difficult for Tesla stock and long-term investors. And I can even see a case for selling, paying the taxes, sticking around, maybe keeping an eye on it, and reinvesting if Elon goes back to the company. But Elon's not at the helm today. He's not at the factory. He's at White House, alienating hundreds of millions of people, if not 1 billion people around the world. 90% of EVs last year, 90% of BEVs were sold in China, Europe, and California, other ZEV states, the liberal states in the United States. So Elon is alienating hundreds of millions of people that are located in these geographies that saw 90% of EV sales last year. So Tesla sales are going to plunge this year. There's no doubt about that. Even with this new Model Y, even if the Cybercab production starts and everything, it's not going to be robotaxi. It's going to start with a steering wheel. Robotaxis are 5-10 years out. FSD performance is predictable. I predicted it last fall when Tesla AI team was sending out hype tweets. Elon was sending out hype tweets all summer that the critical disengagement is going to drop by 10x and all that bullshit. I said FSD 13 is going to do maybe 98% of trips without a critical disengagement. And that's exactly what's happened, despite the fact that it's limited for hardware for vehicles. So much more capable hardware on the cars, and still only 97.5% of trips are completed without a critical disengagement. So Tesla FSD 13 has underwhelmed even my low expectations. So that doesn't bode well for FSD 14, 15, 16, hardware 5, 6, 7, 8. And I think that Tesla needs an algorithmic breakthrough. The autonomous driving feature needs an algorithmic breakthrough to come about. And that's not going to come from a Tesla AI team. It's going to come from DeepMind, Google, and Waymo. So I think Tesla investors should kind of think their positions again, rethink their positions. Stephen?
Hey, Iman, I'm just confused on something. I was wondering if you could help clarify. The White House press secretary said Elon was a once-in-a-lifetime entrepreneur. Are we talking about the same Elon here that they're calling the once-in-a-lifetime entrepreneur who's also alienating most of his customer base right now? Same guy?
I mean, I don't know, but politicians will say whatever that serves their purpose. Like, Trump was posting memes about Elon stock and dropping down to his knees for him a couple of years ago. And as soon as Elon started throwing hundreds of millions of dollars his way, he changed his tune on Elon. So, if there's a rift between them, it's going to change back. That's the nature of politics. All right. Thank you very much, everybody. We're going to leave it there. Tomorrow we're going to meet at the same time, maybe discuss NVIDIA earnings. I'm going to work on an article for NVIDIA tonight, post-earnings analysis that's going to be published on Seeking Alpha. Highly recommend reading the preview that's linked at the top of our screens. Thank you. And I'll chat with you all next time. Take care.